You talk about it privately, we talk about it publicly. This is the Real Estate Insiders Unfiltered podcast.
Welcome back to the Real Estate Insiders podcast. Normally that's James's line. You may be wondering, where is Dwiggy? Well, Dwiggy had a scheduled vacation, which he greatly deserves. He just happened to schedule it at the same time where Compass bought Anywhere. And that's news, kids. So what we decided to do, we did a webinar, an industry-facing webinar yesterday, and we're going to take that webinar and then make it this podcast episode. So you won't see the normal banter that you see. It was more industry-facing, so not quite exactly Real Estate Insiders Unfiltered, but I'd call it Real Estate Insiders slightly, very little bit filtered. But not really. It's the same conversation that we probably would have had into a microphone on our pod. And since James is on a vacation, which he richly deserves, we thought we would take that webinar and get it in your ears, kids, so that you can hear our thoughts on this huge news where Compass has agreed in principle to acquire Anywhere. You're going to dig this episode. Hope you like it. Put it in your ears, kids.
You know, when you get a call from James at like 4:45 in the morning, it's either going to be really good news or really bad news. Turns out this was just news, but yeah. Good morning.
Yeah.
Hi, everybody.
I was just calling you with some jokes.
Yeah.
Just to make you smile when you woke up. So
Knock, knock. Who's there? Compass. No, Compass and Anywhere. Yeah. That was a good one, James.
That's a good one.
Joke.
There you go.
First thing in the morning.
Nice. Hello, everybody. You're putting your names down. We appreciate that. So lots of Keith and I were playing bingo at 4:45 this morning, and nowhere on that card was Compass acquiring Anywhere.
No, it was not.
We'll let everybody jump in.
California, just up the road from me.
We've got people coming in from all over everywhere. So we'll let everybody dive in here for a sec. Hey, also, everybody, good news. My internet dropped 15 minutes ago before we started this webinar. I thought that was funny. I'm like, hey, Keith, my internet died, my house.
So we're currently doing this while James is hotspotted to his phone. What could go wrong, fam? What could go wrong? What's up, Green Bay?
Supposed to be on vacation today, but I haven't left yet. Still
doesn't start till noon. You're fine.
We're good.
Yeah.
All right. So people are diving in. Keith, shall we? We've got some time. Let's get going. We always take an hour or so. Where do we want to begin, my friend? You want to start with deal terms?
Yeah. I mean, I guess we should.
Actually, let's start. Let's start with congratulating them. Like,
yeah, no, for sure. Like, look, I just published my newsletter on this too. Look, I mean, it's a moonshot, right? Like, whether it works or not, whether you respect all the decisions that company has made or not, this is like they're shooting their shot, and I can't be someone who encourages people to shoot their shot and then sweat somebody when they shoot their shot. So it's a bold move. It's a big move. There is risk associated with it, like there is any big move. But like, congrats to Robert Refkin and his team. They're taking a big swing, and I can't like and respect people who take big swings and then say, I don't like this big swing. So shout out to them. Shoot their shot. Very interesting.
Yeah. Not shy that Robert and I have some very differing opinions about certain aspects of the industry. And utmost respect and kudos to him for putting it together. Deserves that. I love entrepreneurs. I love people who want to go out and do big things. And so, I'm sure some of his people will be listening, and I wanted to say congratulations. And I hope the deal ends up being whatever they wanted from it. Keith's and my analysis will be based in some of the data, and then sort of we're going to play this honestly with a bunch of scenarios. We kind of figured out how we would do this today of what does this mean? We're going to cover best case scenario. We're going to cover worst case scenario. We're going to go down all of those from just our two idiots analysis of what we think this might look like for Compass and Anywhere and the industry. So
yeah. And look, we're doing this on the amount of information that we've been able to consume in the few hours before we jumped live on here with you all. So, I promise you 100% something we are going to say in this time together will be wrong, inaccurate, and incorrect. Okay.
Yeah.
100%, because we are processing information really fast. I already see in the comments, people are like, yeah, okay, but tell us about these private listings. Don't worry, we're going to talk about we'll talk about private listings and what this could mean. But we'll also try to take some questions as well from folks. If you got them, we'll do our best. There's hundreds of you and two of us. So, but let us try to get through sort of, we're going to brainstorm and just think out loud, quite candidly, various scenarios, our thoughts. We'll frame up the deal terms, but really, like, you're just going to watch James and I have a conversation that we would normally have in a Zoom room together on something like this. We're just doing it with an audience today. So we don't have all the answers. We've been able to process as much information. We're two pretty smart people who've thought about it for a few hours, and we're going to share with you our thoughts. So with that as a frame up, why don't we dive in, James?
Yeah, why don't you start with deal terms and stuff, Keith, and just run down on that.
So deal in plain English. Look, Compass, it's a stock trade, no cash involved. On paper, it's worth about $13 a share. Compass folks will own 78% of the new venture. Maybe it's Companyware. I don't know. That's a working title. I'm not sure what they're going to call it. And Anywhere will hold about 22%. They'll form combined a $10 billion with a B, kids, dollar company, market cap company. So look, it's a big, bold connection that basically combined they'd be 340,000 agents roughly worldwide. I mean, that's big. That's
210,000 here in the US.
Yeah. So
between the two firms,
high level, those are the high level deal points. You want to add any color, James? You can.
I'll just add a few other things just as I went through the presentation they gave to investors. So 210,000 agents nationally. That makes them the largest company by a long shot in the US. 930,000 closed transactions between the combined firms. That's about 25% of all US real estate, just shy of. The acquisition combined brings Compass in with title, escrow, mortgage, and relocation now. I think ancillary services that they'll want to attach to as many transactions as possible. For those of you that don't know the brokerage space, the reason why the word broke is in brokerage. You need to have ancillary services to make a lot of money. 50 states, 120 countries.
Yeah. And really, I think one of the interesting parts about this is they now have sort of a choose your own adventure offering, right?
Yeah.
Where
choice.
It's a choice model now for them, which I find interesting and could be compelling.
So the other one thing they put it down here is they anticipate a $225 million net cost.
Yeah,
savings.
good luck with that. Yeah, we'll talk about that one a little more. But yeah, that is in there. You're right. Yeah.
So they're basically, to be clear, combining resources, staff, reducing redundancies. They believe they can achieve that within 3 years of transaction close, and it reduces their non-GAAP OpEx by 8%. So, combining companies is about leveraging the same resources and just doing more. I will simply add that I question that because Anywhere has done a tremendous amount of
cutting
that already in order to be a very thin operating company for a lot of different brands. So I question that somewhat, but that's just my, outside perspective. So
no, my outside perspective is they won't hit that. I mean, that's a big number. And that big a number, you're cutting a lot and you're cutting deep. Of course, they have over. And by the way, just so I can go on the record, like laying people off synergies, like that's an interesting word. Everybody does it. I'm not like picking on anyone here, but like those synergies are people losing their job. That's the close, that's most of it, right?
Yeah.
And demising old tech, and all of this will take time. That's the other thing we should probably frame up. Like this isn't a tomorrow thing. This is going to take time. There are some leading indicators that I'll be paying attention to see how well this merger / acquisition comes together. But this will be measured on a calendar, not on a stopwatch. And so no sudden movements, necessarily has to be thought about immediately. Someone asked me,
You want to go through those conditions? Do you want to talk about those conditions?
Yeah, we'll do it as we move through.
Okay.
I mean, there's really only two. It's how do they manage the debt, and then how does the industry respond? How do the agents respond? One of the challenging things about running a real estate brokerage and or franchisor is I'll be ruthless business guy. Your assets are human beings with feet, and they can vote with their feet, right? So the two things that I'd be paying attention to is how realistic is it that they manage this giant debt that they've got? And then what happens in the near and medium term with franchise renewals and with agent count. That'll tell you how this will go, or good leading indicator how this will go. Someone asked me to unpack the choice model. Well, before Compass was a brokerage, not a franchisor, and you could go work for Compass and you could work for Compass or Compass, right? When and if this deal goes together, and there's some ways in which it could not, when and if this deal goes together, you now have a choice. You could have a franchise model or a brokerage model. Or an agent model. You could have a bunch of different brands and look and feels to pick from a franchise, and then a couple different from a brokerage standpoint. Again, this is all just assuming they keep everything the same. Are they going to rebrand everything to Compass? I have no idea. Robert hasn't told me. I also haven't asked him. We don't know each other that well. So a lot of moving pieces here, but I do think this choice model is an interesting model where everybody in residential real estate, whether you're an owner or a leader or an agent, you have different wants, needs, and desires. And so a company trying to figure out how to meet you where you are, I think that's interesting and worth sort of,
Well, I think it's smart. I mean,
Yeah.
this is a comment I made recently to someone else. There was a comment talking about how franchises are dead. I was like, no, it's not. Franchises are the largest real estate companies in the U.S. So this gives them the ability to, as Keith mentioned, to have that choice with a lot of different brands. I do think, Keith, what's interesting, and I'll just throw this out here since we're talking about this. It's not a secret that the business model, the comp model, the split model, or the way Anywhere was operating has been and has felt massive pressure by entrants into the space that are doing capping models or the flat fee models. And so Compass and Anywhere are both operating off of what would be argued as a business model that is questionable on how long that will thrive in a space. And to be clear, when I say entrants, I'm talking about, you've got flat fee models like HomeSmart or Realty One Group that operate in a much less expensive capacity. You've got LPT, you have EXP, you have Real. That's kind of the new darlings that have been growing. That's on a different model too, both of which are very competitive against what I call traditional split models. And so I think what I find interesting about this analysis from Wall Street is in the stuff I've read so far, I don't see people questioning the longevity of the current business model compared to the ones that are growing the quickest in the markets today. And so I think that's a discussion that will ensue over the next 12 months.
Yeah,
So,
I'll give a quick Wall Street reaction. I pulled these stats in futures trading. I'll pull them while we're on here too, but in futures trading, and it'll be within some standard deviation of this. Basically, Compass stock was down. I think it's bounced between down and flat. When I pulled it, it was at 11% down, but that was very early news. Things tend to be more volatile. And Anywhere was up 55%. Last time I looked, it was up 50. So basically, Wall Street is saying, great job, Anywhere. Compass, are you sure you want to do this? That's kind of the vibe from Wall Street.
but the reason I wanted to add context to this is again a Wall Street thing. Compass has, since its inception, been classifying itself as a tech company, not a brokerage. And Wall Street values tech companies differently than they do brokerages. So the ironic part is Anywhere from a business perspective is bigger, not necessarily from a financial, but from a business perspective, it's bigger. But the valuation difference between Compass and Anywhere is significant. Compass has a much higher valuation market cap on Wall Street versus Anywhere does. So it's not, to me, not a surprise. Wall Street's like, wait, what? You just acquired a company that has a very low valuation to us. We thought you were a tech firm. Now, again, I think this is all going to play out in Wall Street, as you said, bounces around. So it's not surprising Anywhere stock went up and Compass.
The other piece. Wait. Yeah, the other piece that I've been reading, at least on the Wall Street chatter and some of the different groups that I'm in, is, Compass just cleaned up their debt, right? So they just made it through, and now they're layering on a bunch of debt. Now, I've heard two stories on this in the chatter. One is, yeah, they did it, so they know how to do it. The other is, man, you just got that cleaned up. Now you've got to go do all that work again. So we'll see how all that plays out over time. But we're
going to cover, by the way, in the chat, we're going to cover private exclusives and all the stuff. We're getting there. We're just wanting to give you a little background before
we got to start at the high level, and then we'll get down to how it'll affect your listings. All right. So how could this deal go sideways or not come through? Figure we should touch on that pretty quick.
Let's hit that.
Shareholder vote is required. That's pretty much a rubber stamp. Most of their bigger shareholders have already said they endorse this decision. So I think it'll be fine, but that still has to happen. Government approval. Uncle Sam will look at this one. Current administration is more, I don't know, call it business friendly. So I also think that will go through. But those two things still have to happen in order for this deal to go through. So worth noting, pay attention to those two pieces.
By the way, just for context, the deal is expected to close by the end of 2026, just so you have some context. And there are some guarantees that need to be done by September of 2026, or there has to be some payouts if not. So just for context, we're 12 months before this thing would even come together
to come together.
Yeah.
And then I mentioned this, but this is a big one that I'll be paying attention to because it's going to tell me a lot. Look, if you go on social media, I'm just going to call it like I see it. Hope that's all right with everybody. But a lot of people said a lot of things on social media, right? A lot of people upset, frustrated, mad about the whole private listing, private exclusive thing. Well, some of those people now are in the process of becoming a Compass company. Right. And so paying attention to, like, was that just people keyboard warrioring on social media, or are some people going to vote with their feet? Are some people going to make a business decision based off of stances that they've taken on social media? I don't know the answer. But that will also, that's an if that matters, right? They call it in the industry breakage, air quotes. I hate talking about human beings like they're, vases or whatever, like how many broken transit, right? But it will be interesting to see how that all plays out. My intuition is people say a lot of things on social media, but when it comes to taking action, there will be fewer, right? But it won't be zero. And so just seeing how that plays out over time, that is a number when they put out their quarterly reports I'll be paying attention to.
The one thing also on that same conversation, Keith, is, and this is just, we're in franchising, so we understand the space. There is something to watch for, and that is in the franchise agreements with Anywhere. I do not know, just for context. I'm just throwing it out there from understanding franchising. Sometimes in contracts, there are clauses where there's a change of ownership or control. The franchisee has a right to break their agreement. I don't know if that's in any of those contracts. Nobody has access to that, but that is sometimes common to see. And again, that provides opportunity for what Keith called breakage to occur. So just, there's a lot of nuance in this that can happen. So
I think we should just, because the audience isn't going to let us do this from high level to low level. We should just, I mean, the amount of questions around separate from the MLS, control listings privately. Can we just do that part now?
Sure. Let's just go. So, all right, let's start at the top. Yeah.
So James, why don't you go first? Could they separate?
Yeah,
from the
I'll
MLS?
jump and then you provide color.
Yeah,
You
yeah,
always
yeah,
rein me
yeah.
back in. So
Yeah.
all right, so let's just hit the elephant in the room. Let's start at the top because I think this is a good piece to go with. Private exclusives. Yes, I can't imagine Robert not wanting to push that across, all the brands. Yes, if they had 210,000 agents in the United States and 25% market share of the U.S. residential real estate, it would have an impact. How many people do it? I don't know. Look, there's a lot of people at Compass who don't like that program anyway. But, right now there's roughly 9,000 Compass listings that are in the private exclusive status, even with this, fight with Zillow. So I can't speak to it, but logically it would make sense that they would want to continue to do that. As I have stated, this is a benefit to the brokerage. It allows you to double end deals. You could see that increase that they did a private listing network across all their brands. Yes, NAR doesn't allow that through its policies. No, they're not going to care what NAR has to say. Everybody should know that. No, they're not going to care what the MLS rules are because they've already made that point. I'll go down that domino effect there shortly. But yeah, I do think it's going to be a push. And, our friend Chris Kelly at Berkshire on our podcast a week ago said that, if this is the direction we go, I'm using his words, it becomes an arms race, and all the big companies follow suit. So, yeah, I mean, there's a big concern here. I had a call this morning out of the 50 that I had since 4:30 this morning about, well, what about lawsuits? Look, I'm just going to share it with you so everybody understands this. There's no scenario where these companies aren't looking at risk and they're looking at it going, yeah, whatever. Like, just think about it this way. Let's say there is a lawsuit by home sellers 2 years down the line. It takes 2 years to litigate. The company's now worth, 10 times its size and amount. They settle for, $500 million. It's a rounding error on their P&L. They don't care. The lawyers get a third. They move on. But they've gotten what they're looking for. I'm not speaking for Compass. I'm just giving you the Wall Street play. So it is a big concern. I do think this does shift the industry. I do think this creates an arms race. I do think we'll talk about Zillow in this conversation as well. I do think every single board of directors of every single major real estate company is having or had a meeting this morning to talk about what this looks like and what this means for the future of their companies and, the space. I've said this, Keith, for like 3 months now. Zillow's decision on banning listings and that litigation is and was always going to be the thing that decides whether the arms race goes mainstream or it stays small. I'm very curious. It's been interesting to be a fly on the wall for, Rich Barton, Lloyd, and Jeremy this morning, having their conversation about how Zillow wants to respond. But
you're being pretty declarative there. I just want to tone that down just a little. I mean, everything that James said is possible, but it's not a fait accompli, right?
I don't have any idea. Yes.
Yeah. So you just were saying it like it's going to happen. And I
don't know if it's going to happen. I have no freaking clue. Nobody knows. Right. I think that there is, which we're going to talk about, there's going to be lots of ways that this plays out in some way, shape, or form. I mean, again, this whole thing could blow up. Nobody knows. But there's certainly an arms race. Yeah, I think there will be. Yeah.
If this comes together, if the deal comes together, and if the lawsuit ends in the Compass, now Compass Plus Anywhere goes private exclusive, that will be an issue. And I see it in the chats. I mean, of course, agents are going to have a difficult decision to make, but most of them are in the business of selling houses, right? They're not in the business. Like, this is like some Game of Thrones stuff, right? Like, sure, the kings and the queens are going to, go to war, but I'm just the guy trying to sell fish in the market, right? Like, I don't really care who sits on the throne. I want to do what I do, right? So there will be pressure for agents but there's so many dominoes that have to fall.
Yeah.
This is going to take a long time, right?
I want to be clear. We're pontificating. Keith and I do this all the time, literally every day.
Yeah.
To be clear, I am wrong a lot. So is Keith, and it usually ends up being somewhere in the middle of what we're saying, like 90% of the time. So that's a fact. Like we're always we're either we don't know and nobody knows. We're just trying to give you the lay of the land. I would be surprised if they did not push private listings across an entire large network. That would be a logical decision if I was part of the management team there doing that.
Yeah, they're definitely, look, that's why that is part of the reason that they're doing it. Full stop, right? Yeah. Well, I shouldn't say that. I believe it is part of the reason that they're doing it is they now have a big enough footprint where they feel like they can make that something real, right? But again, if agents start leaving in mass, maybe that changes it, right? If franchisees start saying, I don't know if I want to do this. And I see you, of course. And it sounds like you've already decided, which is fine. I'm just saying I haven't decided yet. I understand that all the possible ramifications, but I'm not going to say today on Monday, September 22nd, what's going to happen. Like this is at least a year away, probably more. And there is a lot of time.
Well, it's years even after, to be clear.
Correct. And the debt load that they have on the other side of this is commensurate with airline debt to equity ratios, right? Like airlines go in and out of bankruptcy regularly. I'm not saying that'll happen to Compass. I'm saying that they have a very, very large debt to equity ratio, and how they manage that. And in order for this to work, they need to keep every one of those agents plus continue to grow to handle that debt load. If some of that starts to get wobbly or go sideways, I don't know how this all paths out. But if anybody listening,
there's a lot of debt here. Like, I don't think people looked at the numbers. I mean, there is a lot of risk to this deal. Anywhere already had a significant amount of debt. And so they're assuming that debt. Now, granted, they can, get people to extend it, et cetera. But this, to Keith's comments, this isn't on the books. There's a lot of risk in this. I'm not saying, by the way, that they'll fail. I'm just saying this is a very risk intensive deal that they're putting together. So
yeah, I'll unpack the debt a little bit. So
yeah, go down that road for a sec.
Yeah, so they've got a lot of debt. I use debt to equity. I just picked one. You can use other measurables. Usually, the safe zone is under 2 times, right? Yellow zone is 3 to 4, and then red light sort of starts to flash at 4, right? That would mean 4.4 pro forma debt to earnings, right? And if they get all the synergies, which I'm just going to go on record, that one, I don't think they're going to get $225 million in cuts. If Robert and his team are listening, man, prove me wrong. I'd be impressed. But that's a lot of dang cuts, especially in a short period of time. So, look, United Airlines had to borrow a bunch of money during COVID because no one was flying, right? Well, then their debt to equity at that time, after borrowing all that money, was around 5. Compass is at 4.4. That's a lot. There's a lot of debt on the books. They're saying, yeah, I know that, and I'm going to lead this out and I'm going to win anyway. Rock on, do your thing. Let's see. But let's not just act like their debt load is de minimis. That is real and will be a problem and something they have to work through.
Okay. Impact, where I think this affects companies. Like I said, pretty much, I'm sure everybody had a board meeting this morning. Again, I'm pontificating, but I think you will see large companies do 2 things. Number one, if they weren't, which they all were, but if they weren't thinking about a private exclusives system, they are now. And if they already had it, they're thinking about it further. That'd be my guess on how they want to approach that, or at least making it ready. But I do think, Keith, I'm sure you'll agree with me, I think you're going to see a lot of acquisition now. I think you'll see a larger spur of mergers and acquisitions in the space.
Yeah.
I think big companies will get bigger.
I think there'll be a lot of private Zoom rooms in the coming months while people explore options, while paying attention to the ramifications of what happened. Right. So yeah, there's gonna be a lot of conversation again. I understand. I'm just not dramatic about much, right? This is something that is going to take a lot of time to sort itself out. I'll tell you right now, I'll say it again at the end, but if you're a real estate agent that's listening, the single best thing you could do is put 5 into contract in the next 2 weeks. right? Like I promise you, you won't worry about this at all. If you've got 5 you'll be too busy. So don't, please spend today sort of, watching the car crash, and we're glad you're here on our webinar, and you can read my Substack, and we'll probably do a podcast on it, and cool, right? Spend a day or two, but really, like, seriously, get back to business.
Yeah, they're asking if next film's going to merge, Keith. So I'm going to tell you right now, we're raising $1 trillion and we're going to buy everybody. So, yeah. So let me address a few other things here real fast. We talked about the companies. Yes, I think you'll see some more M&A, and Keith's comment, I think everybody's going to be exploring those discussions about it's just a natural thing. Like to be clear, everybody does this. It's happening all the time. About what is the best opportunity for growth in any organization. But I think what's an interesting conversation to have, though, is what does this mean for associations and MLSs? So again, I'm going to pontificate. I have no idea, except I can tell you what I think would occur if the dominoes went like this. Let's pretend that Anywhere and Compass deal gets approved and it's done. I personally think it will. So what does that look like? My guess is I think other real estate companies will get bigger. I think you'll see some M&A. There are a lot of companies competing with each other that have the same business models, and I think you could see a lot of them combine to become one larger entity or entities. I've laid this out multiple times that, I should say, I've done a lot of these assessments in an arms race of private listings. It's probably like 10 major companies in the US, maybe slightly less, than lots of independents or companies that have market share in an area. Like there's James Dwiggins Real Estate, I'm making this up, but in Bozeman, Montana, and I've got 20% market share. This private listings thing doesn't have any, it doesn't affect me the same way. So it's not like everybody goes away. It's just big companies get bigger and there's a lot less smaller firms in that process. But tying that to MLS and association, this does get very interesting. I think that if you have larger companies, let's pretend that there's 5 or 6 or 7 companies that have 40% of the US real estate market. They certainly can have a lot of influence on how MLSs operate because MLSs need membership, and certainly associations who are trying to find their value proposition becomes harder for them. And so I do think that you'll see in that world a lot of consolidation in MLS and associations as well. Long term, if you've got 7 or 8 companies, I'm picking a number, by the way, I have no idea, I'm just saying, but if you had 7 or 8 big companies that controlled 40 to 50% of US real estate, it would make sense that they would create their own multiple listing service at some point that's open to everybody to avoid any antitrust issues, but they would definitely want to get rid of all the politics of 500 MLSs and all of the association stuff. I mean, that is a very easy conclusion to work towards.
And most of this consolidation in the MLS space and candidly in the residential real estate operator space has already started, right? Look, we're at or near the end, right? We're at or near the bottom. At least that's what I've been saying. I think it's getting, we've been sub 6.5 for the next home folks that are on this. I know this was open to everyone, but they're sick of hearing me talk about it. But rates have been sub 6.5 for a while. Market's starting to come back. But it's been a rough 3.5 years in residential real estate. We're not used to this long of a downtrend. And so 100%, like all of these mergers and acquisitions conversations have been going on for months, if not years now, right? So
yeah,
it's just accelerating.
There's a bunch of like analysis. I mean, look, just to give people some context, like I'm just looking at some of these comments. I don't see some of these working the same way. They're different models. Like Realty One Group isn't gonna merge with Real. Those are different models. But you could see companies that are similar like that come together. You could see models like EXP and Real. I mean, those are similar. The KW Remax thing, that's interesting. So again, I have no idea, but those are the ways to be thinking about some of that stuff. And then there's a comment here about, Howard Hanna bought Allen Tate, a great example, right?
Mm-hmm.
So, and they're an independent. They're a very large, very successlook brokerage that's on, they're definitely looking to acquire a lot of firms.
Here's what I don't want people.
Yeah,
but here's what I don't want people to get. Look, if tomorrow or next week someone announces an M&A deal, I don't want everyone to go, see, it's over, right? Like, everybody relax. Everybody take a breath. Best thing you could do for yourself right now, put one in contract. I'm going to say it 3 or 4 more times. Like, we don't know what will happen. James and I get to talk into a microphone and tell people what we think is going to happen, but we don't know. And especially we don't know 4 hours, 3 hours after the announcement. Like, this is going to take time. This will take time. Keep an eye on it. Or even better, don't keep an eye on it. Just, tune in to us and we'll let you know. Periodic.
Look, here's a great example. Keith and I on October 31st of 2023, as the trial happened, and then we got the settlement in March of 2024 from NAR. We were on here. We talked about what we thought would happen. We were wrong on stuff. We were right on things. We were wrong on things too. And here we are 2 years later. And things that we were talking about, like compensation, dropping massively and stuff. Some of that just didn't happen. So I think that it's important to understand what's going on, pay attention, but to Keith's comment, just focus on working with your clients locally because they don't care about any of this shit. This isn't important to them. I also will state this, and I shouldn't, but whatever. Like, the consumer chooses the agent. They're not choosing the brand, people. They don't. That's never been the way they do it. They choose the local agent. They like you. They want to work with you. Some of this stuff isn't going to affect your business whatsoever, but it is keys of my job to like pontificate on all these things and give you strategy and insight as best as we can with the information we've got. But
yeah, your job as an agent might get harder, right? You might have to go drive to some offices and look at their book or whatever they were talking about, right? So like, yeah, I hope that doesn't happen. That's not best for the human beings who buy and sell houses. That's not best for the agent population. But I have extreme faith and confidence in the resourcefulness of the residential real estate professional, like massive. We've dealt with bigger problems than this, in my opinion. And so long as you don't lose sight of the human being in the transaction, you're going to be fine. You'll be fine. Now, there'll be some noise, there'll be some turbulence, there'll be, again, this sort of Game of Thrones analogy, but I mean, really, like, I get it, but for you who serve the human, just keep doing that and pay a little bit of attention as this evolves, but don't get distracted.
Okay. I want to pontificate on the Zillow things. I think this is really interesting for me.
Yeah.
So I've been thinking about this one a lot because Zillow's in an interesting spot. First of all, I've in all my keynotes, I've been saying the most powerful company in residential real estate in 2025 is Zillow because they've come out and said, we're not doing X, Y, and Z if you don't do this. It's a very bold move on their part, right? So I found that interesting after all the CCP controversy that Zillow made that stance. But they're in an interesting predicament right now. They've got a lawsuit with Homes.com. They've got a lawsuit with Compass, which is, I'm going to expand on that. And now they have a lawsuit with Morel, which is the lawyers that's filed the suit in Morel. For everybody to have context, Morel is the original case in the Northern District of Illinois that was the original before Burnett Sitzer. Same case, just different venue, etc. So they are being sued by the same law firm that sued everybody else. Morel, the law firm by Morel, was also involved in the Burnett Sitzer case. So they've got 3 massive pieces of litigation that's going on. And, I can't help but imagine that this was a really weird conversation this morning because the largest real estate company in the US anywhere is now being bought by the company that they're in direct litigation with and see completely the opposite of each other in how the industry should operate. That is a very interesting thing to think about on how that plays out, because when it was just Compass and 40,000 agents, Zillow was like, like it's a thing, but it's not like going to kill us. But when you add 210,000 agents in the US who are also Zillow customers, that starts to change things. That's a bigger, deeper conversation when 25% of US real estate potentially under one company is now at odds with each other. And how does that play out? Like, where does that go? Do they back down on their stance on private listings? Do they dig in harder because it would kill their business model if they let it get bigger? Which, by the way, these are all conversations they're having right now. Like, what happens if the private listings thing goes across the Anywhere network and it's, a massive amount of inventory no longer on Zillow? Like, they are in an interesting spot this morning. Again, not on their bingo card, I'm sure.
Trying
to
the only
out
piece
the
I'd
path.
add though too is and nothing you said is wrong. I'm just adding some context to it. I don't know if you knew, James, but lawsuits are expensive. Are you aware? Have you ever?
I am. Thank you for the reminder, Keith.
Yeah.
Yes.
Well, when you're trying to clean up debt and get, $750 million in true up, air quote synergies, a big giant lawsuit with Zillow, who also has deep, billion. Yeah. Zillow has deep pockets too, right? This is Clash of the Titans, right? Before it wasn't Clash of the Titans, maybe now it's Clash of the Titans, but it's like there are so many plates that will be spinning between Compass and Anywhere right now. It's just in some ways, while I get that the combination gives it more strength if they win, I do think trying to manage all of this at the same time is a Herculean task.
It is. But I again agree with you, and I can't imagine the conversations going on even at NAR right now about the same thing. Like, Robert's got a massive war chest to play, not financially. He's now, it's a lot of agents that are represented under the National Association of Realtors. 40,000 agents was one thing, but again, that number, I think it's a very interesting move. And to your point, Clash of the Titans, there's a lot of influence that can happen. Again, if NAR decides they want to back off policy because they don't want to upset the apple cart, it's a very interesting thing to watch. Again, pure speculation, but by the way, I'm just going to state this, as I've stated it before, and I'm going to just throw it out there for conversation. Everyone does need to pay attention to how far they push Zillow. They are the largest website. They are the largest source of real estate by a factor that is unimaginable. Like, no one in residential real estate has the money to catch up to their traffic. And, if they get pushed too far, I have said this, they are not a brokerage. I mean, they are to collect fees, but they're not operating that way. It would be interesting. It's not interesting. There's always a potential they could be backed into a corner and just go, you know what, we're not going to play this game anymore. We're just going to become a full-blown brokerage. I'm not speaking for Zillow. This is just my speculation, but it would make sense if they're pushed too far and they can't run their business model. It would be an alternative way to do it. And
I think it's
why
plausible.
I say that.
Yeah. Go ahead.
Well, I only say that because that would be also a risk to Compass, because Compass's traffic is not even, it's a blip on the radar compared to Zillow, and agents want to go where there's business, and Zillow does supply a tremendous amount of business to realtors across this country. So whether you agree with the business model or not, so again, it's just pontificating. So.
I think it's possible? Of course, anything is possible. Do I think it's probable? I still don't. Mostly because it would hurt their bottom line. Right now,
agreed.
Zillow can get a comparable to broker margin, maybe even better, with none of the risk. Better. Right.
They're collecting 40% with no fiduciary.
No fiduciary, no CapEx, no rent, no office manager, no nothing. So, that would sting for them. That would be a problem. I saw a couple people talking about this being a bluff. Look, theoretically, but I mean, this one has more legs than any. I don't think this is a bluff. It doesn't mean it'll come together, but I mean, they've put out a prospectus. There is a lot of wood behind the arrow on this one, and so I don't think this is just sort of headlines for fun, for funsies. This is something that they are working towards. Just to give some context too, Zillow, Cash in Bank, quarter ended June 30, 2025, 1.15 billion in cash and equivalent, just chilling. Most recent debt, 328 million, right? So like, if you want to go war chest for war chest, Zillow has deep pockets. So
Zillow has a lot of cash, and by the way, Compass does not. So,
correct, and neither does Anywhere, right?
Yeah.
So cash on hand, June 30, 2025 for Compass, 177 million. Now, don't get me wrong; all these numbers seem big to me, and if anybody wants to wire it, I'll send you my banking instructions, right? But 177 million for Compass, 266 million for Anywhere. Compared to the 1.15 billion for Zillow, like it is not close.
Yeah, they are a behemoth, and they've got a big war chest. And by the way, everyone's like, "Oh, will they settle?" And Zillow ain't going to settle. They're going to take this all the way where they want to go. I would, they've got the financial resources to do that. So,
yeah. And I just want to go on record, like I will, that you can maybe next, James, or maybe we can save it for the end. But I'm going to go now. The net effect of this, if it all comes together, is bad for the industry. That's my opinion. Okay. So just so there's no confusion that, in my opinion, if this all comes together, it's bad for the industry.
I agree. I don't think this is good. I think it's actually what we haven't talked about is I think this is bad for sellers and buyers. Because I think, as I've stated, these policies, in my opinion, are harmful to consumers, and escalating that and causing the rest of the industry to escalate that. It's my friend Andrew Flackner said it on a webinar he did, which I thought was a really good analogy. It's game theory. If one person does it, the rest have to do it as well. And I think this ends up causing a long-term rift in the industry which take us out of it. I think it just harms consumers, and that's sad. So I do think that these ideas that have been pushed, which I know 90% of realtors don't agree with, pushing everybody into private listings. It's not good for people.
Well, you know what? We'll see, James. Because I know, and part of this is my frustration with social media, right? Like everybody wants to be a gangster until it's time to do some gangster stuff. You know what I mean? Like everybody wants to talk about how they hate something on social media.
Money talks.
Let's see what you do. Right? If you've been on social media bashing this, and like, what are you going to do? I'm curious. We'll get someone on the pod. I'd love to interview someone and ask them like how they're working through this mindset, because and I feel tremendous empathy, because the Anywhere agents just wanted to sell houses, right? Like they didn't wake up today and want this news. Now they got to answer all these questions and think about all this stuff. There was a question. Oh, is it weird that they would do this deal in the middle of a war with Zillow? Good question, John. No, they're doing this deal because they're in the middle of a war with Zillow. Mm-hmm. When it's time to go to war, you got to call the banners and bigger. Apparently, I got Game of Thrones on the brain, but you got to call the banners, and bigger army usually wins. Not every time, but they didn't have a big enough army, so they're going out trying to create.
I mean, I'll go out on the conspiracy ledge a little bit, just because why not? Since we're having
I love it when you do this. Go ahead. Yeah, let it rip.
The timing is interesting for the lawsuit that Zillow's got with the lawyers and I've read this case. I think their case is just nonsense, but most of them are. Then you've got Homes.com and Compass all suing Zillow at the same time. I mean, there's a lot of interesting timing going on here. Could be coincidence. I don't know. But to your Keith's point, this is all about making market impact. They have a plan. They want to do that plan. Zillow does not want that plan. These are two titans fighting. So you got Homes.com has spent $1 billion or more trying to gain market share. They're a distant third. They've got to make moves. What's one of the fastest ways? By the way, the conversation I think we all should mention is CoStar, which owns Homes.com, is a massively wealthy organization. They have very, very deep pockets too. So you have these companies in the space. Yeah, they're huge. So you got a lot of money being thrown around for market dominance. The one thing we didn't talk about, Keith, I made a note of this. This is interesting to me because it was noted in their investor deck. I put data with exclamation points. The one thing that Anywhere has access to that Compass does not, because they're a young company, Anywhere has been around forever. And so the amount of data that they have on transactions and addresses and information on consumers and all of these is a massive wealth of, it's oil. It's worth a lot of money. And so you attach that to AI and what they can do with that on insights. It is interesting.
Sure.
There's an interesting move there. The final piece was, I think I mentioned this, but the title, escrow, mortgage, and relocation component. If they can, everyone's been trying this. This is the end-to-end ecosystem. They say it in their deck as well, that Rocket's building one, and you've got Zillow building one, and everybody's trying to do this. My only comment to that is Anywhere and Compass have not figured that out yet on how to get attach rate on those ancillaries, and so this is going to be a push for them to try and attach more of their sister companies to the transactions. Whether they achieve that, new idea. So
you and I have debated this ad nauseum, but good luck is my answer. So many people not undervalue, but they certainly underpredict, or they just don't understand the depth of connection between a real estate agent and their client. Now, we can't just hang our hat on that, be lazy and not care about them and not serve them at the highest levels and do all the things that we're supposed to do. But I am not worried. Look, everybody's been trying to disintermediate the real. I've been hearing that I've been in real estate for 26, almost 27 years in November. I've been hearing that for 26, almost 27 years. I remember when I first got in, Wells Fargo, your bank was going to get into residential real estate. So just imagine you walk into your Wells Fargo, Bank of America, and there's a real estate agent desk sitting in there, right? And everybody in the industry was freaking out. Oh my God, banks are going to get into the industry. Banks are going to get in the industry. And my simple question was, and I was 2 years into the industry then. I was brand new. My question was, maybe I should be worried because you guys have been doing this longer, but when's the last time you got good service from your bank? Like the next time will be the first time. This is a service business. So this whole end-to-end solution by these outside companies, will they get some market share? Of course. Will it be significant? No. And they'll take the market share from the agents who aren't doing the job and making sure that when someone thinks about something having to do with their home, they think of you. And if you let them do that, shame on you. You lost. That's your fault. It's not anybody else's fault because you had the depth of relationship and you didn't maintain it. So like somebody earlier said, so what should we do? Look, for every time you see an article that has Compass, Anywhere, or James or I's face in it, grab your phone and call a past client. If you think to yourself, is my sphere of influence marketing plan on a scale of 1 to 10 a 10 plus? If it's not, spend the rest of this week and weekend working on that. Like there are things you can do to improve your business, but it's the same things we've been telling you to do for generations. They just haven't been done at scale. Now if what James is saying is true, and we're now going to have to compete with these mega companies in residential real estate, which is possible, then the depth of relationship with your client will mean everything. And the agents who really embrace that and invest in it, spend time on it, obsess over it, nurture it, they'll still win. And the agents who sort of half-ass it, you're going to get smoked. And I love you, but you should. Like, do it right or get out.
I don't have anything to add on that.
All right.
There's going to take time. There's going to be lots of details. We gave you all the sort of what ifs in this part. It's going to be interesting times in residential real estate. Yay for another 3 years of it. By the way, rates have been coming down. They went back up a little bit, but I hope everybody's like telling their clients that. With that, Keith, I don't have anything else, man. Do you want to add anything else? Like what
no, I just think I'll reframe, like, this is hour 4 or whatever. Please, like, take care of yourself, take care of your mental health around this. Like, please don't obsess over this for days and days and weeks. That's the worst thing you could do. Let James and I obsess over this, and whoever
I'm
you're
going to Yosemite. I'm not obsessing on this the next 5 days.
Let me obsess about this, or whoever in your company that you know is a thought leader. But you got to focus on what you can control in these situations. You can't control how this deal came together. You can't control if it will. What you can control is the actions that you take. And so be a wise steward of your activities, be a wise steward of your peace, focus on what you can control, and there'll be more updates on this stuff as in the coming days, weeks, and months. Nothing will change tomorrow. We've shared with you what we have for today.
Nothing's going to change until we've got another whole year before the deal even was done.
Yeah. And the things that I will be paying attention to are agent, I guess breakage, I'll use the industry word, but how do agents vote? Do they vote with their feet or not? I got to dig more in on the debt and what that really looks like and some of these other pieces. But the thing you should focus on, as always, is the human being in the transaction, or the agents that trust you with their financial future. I promise you, your agents, if you run a brokerage, they want you to have a functional knowledge of this, and then remind them to go be successful with the people that know them, trust them, and love them. So that's what I would.
No, Nick, I'm not climbing Half Dome. All I have to do is reach up like this, and I'm at the top. So. Yeah. Is that bad? Is that a bad joke?
I mean, it was pretty good. James is 6'8", for those of you wanting to know and understand the reference. All right, y'all. Well, I mean, that's it. High on opinion, medium on details, hopefully extra laughs, but we shared with you what we know. As more information comes out, we'll continue to push this out. We appreciate y'all. If you need anything, email James. He's on vacation. Just kidding.
Keith@nexthome.com is my email.
Oh, God. You really just did that on this webinar? Thanks.
You're welcome. Smooches. I'm going on vacation. Bye.
All right. Bye, everybody. Take care of yourselves. Take care of each other. Bye.
Don't be left in the dark. Subscribe now and make sure you post your comments unless they're negative. Then don't.